6/20 2012, and what is today? It is a major FOMC meeting, Ben Bernanke, and it's pre-market. We're going to open up in about 13 minutes. When we called the very bottom on the S&P, and we said that we were going to rally ahead of the summer rally time period, because that is where we called these bottoms on the S&P. And now that the S&P has run its course up here to this neckline, it's about to pop a daily buy signal. It was in a short-term sell signal when we were shorting the tops up here. Okay? And we have ran in this short cover squeeze, negative on balance volume in equities and indexes and sectors across the board have worked that on balance volume. That negative on balance volume has worked itself off. That meant that the higher that number was, that meant that the sellers had did their business as they did in the shorter time frame, and we got to the midpoint of the year where all their gains were gone. And when we called the bottom over here to get net long up and out of the money, we met just that. And we can see these daily breakouts. We can see where the top end of the resistance is. This, we will use our own platform. I'm just showing a standard chart. And today, everyone's expecting QE3 and Twister, and you know, hey, that's a forgiven. We already know that. But does Ben Bernanke want to tip his hand? You know, think of a Texas Hold'em game. They get those two cards. No one gets to see those two cards. Now, think about Mr. Bernanke. Does he want to fold his hand right now, or does he want to let the European unions and the rest of the world play its course before he would act at a later date? But what the bull will be looking for is how they change a statement and then make something real big out of it. That's how you can get back up here to these necklines. It is possible, but I will tell you that U.S. growth in the calendar month of July, today is only 6/20. We have about a few weeks when the earnings season starts. And in the shorter time frame, you know, the economic slowdown that we forecasted 6 months ago in the middle of the year, it's here. Everything we said has happened, and this bottom here can go higher still based on next week. The ECB and all of them will be together, and they're going to try to come out with the resolution that, hey, slow growth is okay in the world. Let's bid up equities. Yields are at all-time lows. Do you want to buy treasuries and all of that? I will say that the upper end of the resistance levels today, we'll be taking a look at that 1370 handle still. Okay? And if we can, it's how they discount the news. However, there will be an emotional reaction today that we'll be gauging in all of these indexes on Mr. Bernanke's statement. That's the S&P 500. When you take a look at the daily Dow chart before going into this meeting, we can clearly see here, before we go into the opening bell now, we can clearly see here how we put our bottoms in and when we call these bottoms. Now remember, summer starts on 6/22, and when we did our analysis over here, it was about buying and getting long, because everyone's going to be anticipating that, you know, that summer rally that takes place usually toward the latter part of June and goes into the earnings cycle in July. However, they've already did exactly what we said, and that was rally it on up to here, where when everyone else would be anticipating a bigger, stronger rally, as it goes up, they start buying up here. They never did get in here. That's the Dow, and it has resistance right there at that 13,100 for the Dow. NASDAQ Composite, which is come all the way up. And here, let's go ahead and zoom in here, MMT. And once again, this index, unlike others, we put the bottom, we rally up, all the way back up here where we had the last part of the breakdowns in this index. And this is that rally from that 5-6 weeks worth of selling. And now the bull is back in control because it's in the positive delta ranges now. And so they've worked off the negative bear ranges to positive bull ranges on NASDAQ Composite. the NASDAQ 100, which is a lot of stocks that we trade. It too come down here to the 200-day simple moving average for the first time. Didn't break below it. They've rallied it up, and it follows the NASDAQ composite. But it's a major index. And we can see here that we've gotten right up here to this major trend line. Where does that major trend line really come from? And there's another one up above there. Where does it come from? It comes from right here. We're right here. Let's just show you this part of it. This upper part where that trend line is, MMTs, that's the upper end. In a shorter time frame, the markets on this particular index is 2643, and it's almost there. So we're going to be watching this particular gap down bar that happened on 5/4/2012, 5/3/5/4 gap down. It's this bar right here that's going to be the upper end of that resistance channel in this NASDAQ 100. And if they can break it above it, of course, you got the little neckline at 2698. That's the direction they're trying to go. They're trying to pop all of these things into daily buy signals. So the bull is definitely in control at the resistance levels, because that's exactly where he is. He's at the resistance levels. They've rallied in anticipation. We had up and out of the money calls, 2600s, way back when this index was down here at 2450. And it's moved 200 points into resistance off of the lows that we called for. So it's time to do what? In a shorter time frame, we've rallied up in anticipation of everything that could be good. And today the market could have a very big volatile day. We're going to open up in 6 minutes. And I've given everything here, NASDAQ 100 and stocks individually will all play the same role. And that in the shorter term, they worked off the negative on balance volume, short interest, and they have bought to cover on balance volume, lighter volume, in my view, to resistance levels, and we've almost had a 200-point rally off of the bottom. And we called that rally on that day, and that would mean that while everyone is anticipating everything, well, the market priced in the bad news in the short term, but now it's pricing in any good news that would have good resolution according to their playbook. But ours is that this was basing on a daily level, and the sellers were out of the market in the mid-year cycle. In beginning, they all got out, meaning they did their business, and now the bull has got control of this side because it's in bull territory with the bull buy signal about to take place. FOMC meeting, we're not expecting Ben Bernanke to do anything. He would be a fool right now to tip his hand to the market, even though historically he doesn't like to disrupt markets. However, you have to know when to buy the rumor like we did and sell the news. Now on Google, here's a daily chart on Google to go in there with the indexes. They've got right up here to the neckline at this major resistance level. This is where the stock had broke down. It worked off its negative on balance volume and negative short interest, and at the current cycle, the upper end of the resistance levels in normal intraday trading, those resistance levels, they should be selling into them. And right now you're at 577.95. There's been a high frequency ECN bot, mathematical pricing scripts in the name. What we're looking for is where they cross those bids and sell the name down below the 570 handle.